As you can see from the bar graphs, both production and sales were lower by 11% for this period. And the table shows a net decrease of 2.6 million tons of product. And this is as a result of a decrease at Grootegeluk, as you can see, of 1 million tons due to increased rainfall in January, compulsory COVID testing that we had to administer after the December break, coupled with poor TFR performance. Belfast was down 0.3 million tons, Leeuwpan 0.7 million tons, and ECC 0.2 million tons, also due to poor TFR performance. Matla was impacted by pit room limitations, as we've been reporting over the years, and COVID compulsory testing, resulting in a decrease of 0.3 million tons. While at Mafube, production was down by 0.2 million tons, impacted by TFR performance and COVID impacts. Now looking at sales, you can see the same net decrease of 2.6 million tons, which is as a result of a 2.2 million tons decrease in our export sales due to TFR challenges, and decreased local domestic sales from Grootegeluk of 0.1 million tons due to TFR performance, and at Leeuwpan by 0.2 million tons due to decreased market demand. While at Matla, sales follow production, of course, and that's why we see that we had lower production there, offset by increased domestic sales at ECC of 0.3 million tons due to export products sold in the domestic market. Now, going on to the second half of 21, we focused that production and sales will be 11% higher, mainly due to the ramp-up of GG6 at Grootegeluk and Eskom sales increasing in line with contractual offtake. Previously, we have highlighted what we believe would be the amount of volumes that would be at risk as a result of the ongoing TFR challenges to an amount of 2 million tons. And based on the current performance as we see it, our update estimation is a further million tons in addition to 2 million tons, giving us a total of 3 million tons of volume that would be at risk. We do, however, continue to engage TFR at all levels and monitoring the performance to update the market obviously later in the year as to whether we believe the 3 million ton will be changing in any way. And as far as the markets, we can report a good demand in the seaborne market, and during a period where supply was disrupted on many fronts, leading to high prices less than a decade ago. Unfortunately, Exxaro could not fully participate and capitalize on very robust pricing due to poor rail performance. However, we've made quite good progress in our export sales to other African countries. India and Pakistan remain our two biggest destinations, even though sales to India were negatively impacted by lower demand for South African coal. And this is really due to the severe impact of their second wave of COVID-19, as well as the increased competition from the Australian exporters. The banning of Australian coal from China has resulted in China being our third biggest export destination and is shown under other Asia. And China is expected to be a viable market for South Africa as long as the Australian coal is under ban.